timely, insightful, discussion and analysis of economic trends and markets. From Southern California to Sacramento, featuring business and political leaders, unique field reports. From Orange County and the campus of Chapman University, this is the Chapman Business Report.
Welcome back to the Chapman Business Report. I'm Pete Weitzner, and we're joined by best-selling author and financial security expert, Pamela Yellen. She is out with her second version of the Bank on Yourself books. This one's called The Bank on Yourself Revolution. Fire your banker, bypass Wall Street, and take control of your own financial future. Joins us via Skype from Santa Fe, New Mexico. Hello, Pamela.
Hi, Pete. My pleasure to be here.
Tell me just real quick, you're, I mentioned, a financial security expert, and you've written now this second book, The Bank on Yourself Revolution. You come to being an author and these methods of saving for retirement. How? What was your background?
My background is that for 22 years, I was a business building consultant to financial advisors. And in that role, I ended up being brought all kinds of financial strategies and vehicles and products. And I ended up investigating more than 450 different financial products and strategies, searching for ways to grow wealth safely, predictably, and so on. And my husband and I were very interested in learning about different ways to do it because we'd been investing in the market and doing all kinds of different things, the things we were supposed to do since, well, 1987, but we'd never come anywhere close to getting the kinds of returns we'd been told we should get. So we just kept on researching and researching and researching.
And now you're just doing this for the fun of it because you are getting those returns.
I'm doing it because I'm passionate about it.
Well, you are also evangelizing about it, hence the books, right? And lectures, I guess. And what do you find? I know you're big on this idea of financial literacy. What do you find with the average investor, and maybe it differs by age? They know enough, they don't know nearly enough, they know enough to be dangerous.
Enough to be dangerous. And interestingly, a couple recent stats. In a 2013 survey showed that 40% of Americans gave themselves either a C, a D, or an F on their level of knowledge of personal finance. And what's very interesting is that the SEC did an investigation in a 280-page analysis after the crisis. And they actually just did this 2 years ago. And what they discovered is that the typical investor does not have enough of an understanding of basic financial and investing concepts. And as a result, they are vulnerable to investment fraud. They don't have a clue how to really determine things like hidden costs and what the real costs are and how to really know what the results are going to be. And I've been researching all of those areas and finding out just how little most people do know about those things.
So the obvious retort of, I can just rely on my realtor for my real estate investment, my broker, my folks who invest my 401k, that would be foolhardy because they may not have what, your best interest at heart?
There's a little of that going, it's definitely some of that going on, but it's a little worse than that. Look, can we talk about 401ks for a minute? That's a real,
sure.
That's a real hot button.
Is that one of your 16 myths, something about 401ks?
Definitely.
What's the myth?
Okay, well, there's a number of myths, but what happened was in 2006, Congress passed the Pension Protection Act. And by the sound of that, you would think it was designed to protect investors and employees in 401ks. Wouldn't you think that?
Absolutely.
Okay.
Which you have, well, let's see, for savings accounts, of course, or for bank accounts, you have $100,000 of protection. But so by virtue of this act in 2006, one would think they'd had how much protection for their retirement?
Well, there's no protection whatsoever.
So that would be zero.
But here's the interesting thing that most people don't know. The whole point of that law was to give protection to your employer, so that if your employer automatically puts your money into certain mutual funds, because the mutual fund industry lobbied for this, big surprise. And if they automatically put your money in those funds, which turned out to be some of the highest cost and worst performing funds, they are protected from liability if you lose your shirt. You cannot sue them because they did what they followed the letter of the law. And people have no clue, so they think that the Congress blessed this, right? And my employer is sponsoring it. Surely they must know what they're doing. And the answer is no, they do not have a clue what they're doing.
Let me just start real broad, and then we can get a couple of specifics. Most people build, the average person, if you're not a business owner, they build their wealth two asset classes, right? Equities and real estate.
Right.
Are either of those, by your opinion, the wrong way to go?
Well, I think here are the yardsticks that you need to use when you're talking about having a predictable future, financial security. You're going to be able to sleep at night. Here are the three questions you should be asking yourself. Number one, do you know what your retirement account is going to be worth on the day you plan to tap into it? How many people do you think can answer that question investing the conventional way?
5%?
I don't even think 5% can do that. You know, the second question is, what will the tax rates be 20 or 30 years from now when you're retired?
At the rate we're going?
Well,
Tax Freedom Day keeps moving. What is it? It's late May now, right?
Yeah, absolutely. The tax day, Yeah, absolutely. So that's, one of those things no one knows the answer to, except the likelihood is that they're going to be higher. And the third question you need to be answer, which at least using the conventional strategies, is how long are you going to live?
Sure.
And so what's happening is people are basing their retirement plan, they call it a plan, but it's really a hope and a wish, on factors and things that they can't predict or control. And that's why we're in the situation we're in.
So obviously you'd love for people to buy the Bank on Yourself or Bank on Yourself revolution, but let's help them give a reason to buy it. Give me one or two strategies that they can, knowing what you just talked about, that they should be employing, or just a mindset, so they can retire maybe when they would like to, maybe be able to retire and live in a manner similar to what they lived when they were not retired.
Well, the two most important things that come to mind are, number one, you need a foundation of safe and liquid assets. And I know the conventional wisdom says, oh, you should have 90 days to maybe 6 months worth of household income in safe and liquid savings. But we found out during the recession that isn't enough. People were out of work, they lost their homes, they lost their college funds, they lost their retirement funds, and they were out of work for sometimes 1 or 2 years or more. And so you really need to have at least 2 years worth of safe and liquid savings, that it becomes your financial foundation, so that you can avoid when things hit the what. And you have to end up, going into your savings. You have to liquidate your 401k. You're foreclosed out of your house. You can avoid those things, but it also lets you take advantage of opportunities, because opportunities present themselves to us all the time. So that's number one. Number two, there actually are ways to grow significant wealth that my research revealed that don't involve taking the risk or having the volatility of stocks and real estate. And I believe that everyone's financial plan should at least have some portion of their assets in something like that, where they can get decent returns. It's safe and predictable, but they're not going to worry every day that, oh my gosh, am I going to lose it all again, like I've already done twice since the year 2000?
Or would we be talking about things like commodities, or things even really off the beaten track?
Well, a little bit more off the beaten path, but in one sense, in that they're not conventionally thought of. But in another sense, one of the things I talk about in Bank on Yourself Revolution is a strategy that is based on an asset that is increased in value every single year for more than 160 years, and that's including during the Great Depression and every single recession and crash since 160 years ago. And it's actually what it is a little known twist on a form of dividend paying whole life insurance. And of course, the reason people like Dave Ramsey and Susie Orman and most financial talking heads don't like whole life insurance is because they say that the cash value grows so slowly, the fees are so high. But what these people don't know is that there are plans that have options or riders added onto them that significantly grow your cash value much faster, 40 times faster than the policies they talk about, and that reduce the commission paid to the advisor, the insurance agent, by 70%. And we also show people how to use that to fire your banker and become your own source of financing for your cars, vacation, your own business, anything that you really want, because you can get access to capital when you want, for whatever you want, by only answering one question.
Sure. Talking with author Pamela Yellen, out with the second version of the Bank on Yourself books. This one called The Bank on Yourself Revolution. Just a quick time for a quick wrap-up question. One, I would assume truism, I thought, and I'd love to know if you agree, is another thing that when it comes to credit cards and credit card interest, if you're going to have them, pay them off that month, or do you have a different theory on that?
Well, absolutely pay them off that month. And here's a little tip. They have shown that, first of all, debit cards or cash are generally, cash is the best thing. You should always pay for cash for as many things as you can. You will spend less when you do that, and it makes it real. And what people don't realize is that even debit cards, because they have a logo on it, most of them also have a little MasterCard or a Visa logo, etc. The research shows that even the sight of the logo on a debit card can excite your spending plans. So don't even use those.
The author's name is Pamela Yellen. The latest book out just earlier this year is called The Bank on Yourself Revolution. Fire your banker, bypass Wall Street, take control of your own financial future. Pamela, thank you very much for joining us. Joined us via Skype from Santa Fe, New Mexico. Thank you. Good luck with the new book.
Thanks, Pete. My pleasure.